It's on record already.
Yes, sorry, I'm just trying to share the material. Yesterday we started with partnership. So today we'll consolidate on that and then see if we can lay our hands on one of the other topics. Just like we said, partnership is a business of two or more persons who comes together to do business together and then share the profit based on the agreed ratio of sharing. And we said partnership start with minimum of 2 and have maximum of 20. And we said among the things that determines how, the sharing of each of the partners in partnership business depends on the partner's input into the business. For example, is capital contributed by the partners. I think we've explained that yesterday. It's just a recap. Capital contributed by the partners. So we also have, what do they call it? Salaries or remuneration to partners. So supposing a partner participated in running of the business, apart from the capital he contributed, he's also going to get salary for that particular participation. We also have drawings. If a partner borrowed money from the partnership business, because he's borrowing the money from what he has already contributed initially. So we cannot call it loan. We call it drawings, isn't it? So he's going to pay interest on what he has withdrew from his money in the business. So I think those are some of the basic things, major things that that determines how what a partner gets in partnership business. So we also discussed that there is partners capital accounts, and we said partners capital account is the account or ledger account of that particular partner. So from the definition in the material, I realized this financial accounting ideally is supposed to be a course of computation, calculations, and all that. But from the past questions which we have studied so far, we discovered that they equally ask questions that are theoretical in nature. So this capital account is the account of the capital account of the partner can either be kept at fixed or floating. Therefore, there are two types of capital accounts. So, and they told us that the fixed capital account of the partners is the partnership agreement is that the amount of capital introduced by each partner shall remain fixed and that nothing either added or subtracted from it. The balance on this account does not change very often. So they are trying to give us where they extracted this from. So it is clear that an additional account must be open to deal with any appropriation incomes and expenses such as drawings, salaries, interest, and share of profits in a fixed capital account. Then a current account is necessary. That is current account. Current account is an account of what do they call it? The dealings of the partner with the partnership business itself. So apart from this, we also have floating capital. Floating capital, this account records capital balance at the beginning of the year and corresponding entries of all the appropriation income expenses from the appropriation accounts. So
Hello,
that
Mr.
is,
Abdulaziz.
yes, please. Go
Hello,
ahead,
Mr.
please.
Abdulaziz. Please,
Yes, I
can
can hear you.
you just tell everybody to mute us? Let us mute ourselves, please, so we can enjoy what we are doing, please.
Okay, let me see if I can mute
Or
everybody.
you mute us from your hand.
So I think it's better this way. So whoever want to say something can just signifies, or let's see how we go about it. So we're discussing the floating capital, and we say that floating capital from what we have gotten from the material, they say this account records capital balance at the beginning of the year and corresponding entries of all the appropriations income. What is the appropriations income? That is all the things that is entitled to the partner at the end of the day during the year. And then expenses from the appropriations account. So what are the nature of the expenses? That is, if partner collect a drawing, collect money from the account and in form of drawings. So the interest accrued, all those are the nature of the expenses you have in capital accounts. So we'll go straight, we jump into the question we started solving yesterday. We have example 2 here. I think we can see the question clearly. In example 2, they say Shegun, Ade, Ojo have capitals of 8,000, 6,000, and 4,000 respectively, on which they are entitled to interest at 5%. So this one, they just want to show us how the interest, how they get interest, a particular income on the capital they have contributed. So 5% of 8,000 gives 4,000, as we can see from the appropriation account there. 5% of 6,000 give 300. 5% of 4,000 give 200. So, and that is how it will be shared. This one is just a simple one. So we're going to example 3. Example 3 there says, Oshun and Omoluabi are in partnership sharing profit and loss equally. So in this particular partnership, it is not a must that in partnership business that profit must be shared equally. It is not a must. It is usually based on the agreement of the partnership business. It depends on the ratio agreed by the partnership business. So in this particular question, the partners, Oshun and Omoluabi, agreed to share the profit of the partnership business equally. So the following was taken from their books for the year ended 31st December 2014. Capital account, Oshun is 18,375, Omoluabi 105,350. I'm running through this because Madam Olua Yemisi, you have a question?
Sir.
Yes.
Yes, sir. Please, that's appropriation account. The credit side, where did they get the balance brought forward?
Good. In the appropriation account, what usually comes to the credit side is in partnership business, they will run their business just normally the way you run business in every other venture. Okay, after arriving at the profit, net profit at the end of the day, the net profit you arrive at, that is what will now be brought to the credit side of the appropriation account.
But
is that clear?
The credit side is showing 200 naira. Is that their profit?
No. It's a mistake. It's 2,000 naira.
Okay.
It's 2,000 naira.
Thank you,
see
sir.
that, look at the question. They said,
yes, I saw it's profit for the year before charging interest in capital.
Yes. So that's the.
Thank you, sir.
Okay. Yes. Naomi is asking if Elizabeth is asking whether the class is account 313 or 311. It is account 311, financial accounting. Then Naomi is also asking that will this class be recorded?
Yes.
It is being recorded
135
already.
into First Bank.
The account is
Into
being
First
recorded
Bank.
already.
Just
Yes.
now.
So I think it's okay, Abi.
Please go ahead, sir.
Yes, Omolara. Omolara, you can unmute yourself and say what you want to say.
Okay, thank you. I want to ask a question on that appropriation account. If the credit side is 2,000 naira, I believe the two sides supposed to be balanced as an equal after addition. With these three items on the debit side, if we add it together, we will not get 2,000 to counterbalance the credit side.
Yes, this one is not a complete appropriation account.
Okay.
They just want to illustrate how you treat, what do they call it? You can see that what they even do there is only interest on capital.
Yeah.
When the interest on capital, if you add them together, what do you get?
900.
900, right?
Yes.
If you remove 900 from the 2,000, how much will you have?
1,001.
It means the partners have 1,001 to share among themselves after they have already realized interest on capital.
Okay.
So, and this 1,100 will now be shared.
That will be their share of profit.
Based on share of profit. Thank you.
Okay. Thank you.
All right. You can drop your hand so that make the half or not.
I will.
So now, let's proceed. We're treating example 3, that is Oshun and Omoluabi, and we've already gotten that they have the contributed capital of 18,375, Omoluabi 105,350. We've already treated this yesterday. I'm only running through it for the benefit of those who were not around yesterday. So also the question continue in the next page. They said current account of Oshun is 10,500 debits. Are we there? While yes, 10,500 debits. While that of Omoluabi is 12,600. Are we there?
Yes.
Yes.
So 12,600 that we are seeing that is not carrying anything, it means it is a credit balance. Is that correct?
Yes.
Yeah.
So drawings, Oshun drew 21,000, Omoluabi drew 3,850. So profit for the year is 123,000. I think we can see all these things I'm reading.
Yes.
We are finished.
So,
sorry, Mr. Abdulaziz. Sorry.
Yes,
why did you say, the 10,500 that is having debit, you said, I don't really get your explanation there. The 12,600, it says since it's not carrying anything, it's a credit. Can you explain why?
We explained current account initially.
Okay.
And we say current account is the account that deal with the dealings of each of the partner as an individual, as Oshun.
Okay.
Are you there? Sylvia.
Yeah.
So Sylvia, you are a partner in a partnership business. You always keep a current account with that particular partnership business as Sylvia's account with that partnership business. So that current account is the one that accounts for your dealings, your transaction with the partnership. So in this case, the account it is usually credit, meaning that is the amount that you are having with the partnership. Every other earnings every other earnings that you have gotten from the partnership business will also come to the credit. It means credit is to your own favor, isn't it? Whatever that is, whatever that is capable of reducing from what you are owing, what you have with the partnership business will come to debit.
Yes.
So what Oshun debit balance simply means is that Oshun is the one owing the partnership business. It's not the partnership business that is owing him. While Omoduluabi is a partnership business that is owing him.
Okay.
You know, now when we're doing the business, we have made profit, you have shared profit with me. It's not that I'm collecting the money immediately now, Shay. The money can be with you, but on record, I have made profit and my money has increased in the business. So it's just a accounting entries until I collect the money before my account actually reduced.
The credit, yes.
You get it. So,
yes.
So let's go to the. If you go to the question, I think we'll get it. We'll get it now. Then Omoluabi shall be entitled to 2,100 monthly salary. What this simply means is that Omoluabi participated in the running or day-to-day running of this business. It also means that Oshun did not participate in running the business. He only contributed money as a partner.
Oshun is a dormant partner.
Okay. So we also have on the note B, interest on current accounts and interest on current
please
account.
Come again, sir. Sorry, sir, please.
On which one?
Sorry, please, I'm sorry.
On which one?
The dormant account, you said that somebody did not participate. I didn't get that very well.
Yes, partnership business, they contributed money so as to be sharing profit together based on the agreed ratio, isn't it? If one person participates in the business, for the fact that he's using his time to participate in that business, Shay is supposed to be remunerated.
Okay, sir.
Yes. So his remuneration as a result of participating in running the day-to-day business is salary. You will get less salary. Okay. So it means anybody that did not participate in day-to-day running of the business, maybe is doing another business. You just leave that partnership. Mukuna, they run them. Me, I did here, they do my own business. My own money is just only there. So when the time for profit comes, so we are going to share it together. Is that clear?
Okay. Yes, sir.
So you've seen different type of partners in the partnership business. So on the note B, interest on current accounts and drawings shall be 15% and 10% respectively. What this statement simply means is that interest on current accounts is, what do they call it? Whatever that you have with the business, maybe is your money that is with the business. Well, after sharing profit for you, if you refuse to collect it, the money is with the business now, and the business is using your money for it to run its own affairs. So thereby, they'll be paying you interest as a result for the fact that your money is with them. So they now tell us that the interest on current accounts for these partners is going to be 15%. So from this question, who is going to get this interest of 15%?
Omoluabi.
Omoluabi. It's Omoluabi because it's only Omoluabi that have a credit balance in the current account. Also did not have any money with the current with the partnership, in the current account. Rather, he's having a debit balance. He's the one that even overdraw his money. So they also tell us that drawings shall be 10% for each of the partner, anybody that drew money. And we've already explained drawings earlier, that whatever you withdrew from your capital in the business is drawings. So that drawings shall be charged 10%. And both of them were told in the questions that they withdrew money, isn't it? They withdrew money from the partnership. Oshun withdrew 21,000, Omoluabi 3,850. So they note C, they say 5% interest is allowed on their capital account. So the capital account, that is the initial capital they have already, what do they call it? Contributed with the business. You know, initially we were talking about fixed capital and the floating capital, you remember? So on this particular capital that you have, you'll be entitled to 5% interest on that capital account. We're also told that Omoluabi is also entitled to a 5% commission on profit after such commission had been deducted. So in this case, it's only Omoluabi that will be entitled to this particular commission on profit after such commission has been deducted. So required, prepare appropriation account, 1, appropriation account, 2, prepare partners current and capital accounts. Let's start. Number 1. The first item we're going to prepare now is let's prepare the capital account. I think we can see the capital account there.
Yes, we have seen it.
In the capital account.
But not all though.
Okay, no, there is no much in the capital account.
Okay.
The capital account is just the capital they have contributed at the beginning of the business. And how much capital did they contribute? Let's check the question, please, quickly. You said?
18,370. Then Omoluabi is 105,359.
Good. So this means where the capital they are going to have, the capital they have, we'll just take it on account straight away without doing anything to it. That is their capital for the business. And I say capital is usually carried a credit balance. Credit balance is what you own now, Shay. The credit balance is what you own. So in the credit balance, we have a capital account. So if we're doing it in this columnar format, so we have 2 columns for each of the partners. Let's not forget our Naira sign. It's very important in accounting.
Please, Mr. Aziz, can you mute everybody? Can you mean this lesson that is stopping us a bit?
Okay. I think we can have our piece now. So in the capital account, we have Oshun. We say Oshun is 18,375. So let's say Oshun here, and then Omoluabi. Oshun is balance brought forward on the credit side. That's the first entry that is coming into the account. Balance brought forward, 18,375, while Omoluabi 105,350. So did they contribute? Did the question tell us that they contribute any capital during the year?
No.
There is no any addition of capital during the year, except for the one they have contributed before in the past. So no any addition. So we are going to close this account. So how do we close it? By bringing to the other side, balance carried down. The same amount, see there is no any other entries, 18,375, and we have 105, 350, 105, 350. So if you close it, you have balance brought forward. Balance brought forward of the same amount, 18,375, and then 105, 350. So I started with this because this is one of the less, the simpler one, and then less complex. It's less complex. So the next item we'll be preparing is the appropriation account. So let's go straight into the appropriation account. We have the normal columnar accounts for the two partners, Oshun and Omoluabi. Don't forget your Naira sign, because they all attract marks. And let us not forget our debit and credit too. We have debit, we have credit, debit, we have credit. So now, the first item that will be coming into the account is the profits balance brought forward, or net profit they made during the year. So, and the profit we have in the question is how much? 123,000. We have 123,000. Sorry, in the appropriation account, the appropriation account will not carry individual columns. It will just be credit and debit. It will just be debit and credit, and then profit for the year with profit for the year.
Mr. Abdulaziz.
Yes, Kay.
Please, can we still use this format in exam? This T format?
Why not?
Oh, okay. Thank you. Because the man was saying that there is a statement account now. We cannot use T form again. That everything is in statement also.
If we can still use statement format on this one too now.
Okay.
We can still use statement format on this.
We can use T format, statement format.
We can use statement format, we can use T format. If you want to use statement format of this appropriation account, instead of dividing the side into debit and credit like this, you just bring this item on the credit side, profit for the year to the top. You start with that.
Interesting drawing.
You bring items, you bring all these items on the credit, you bring it to the top. After treating that, you've arrived at the, what do they call it? Appropriated profit. So you now come and start your distribution based on the balance on the appropriated profit. Whichever one is still simple.
Okay, thank you.
So now, interest on drawings. What is the rate of the interest on drawings?
10%.
10%.
It's 10%.
And how much is the drawings for each of the partners?
21,000 and 3,850.
So Oshun will be having interest of 10% of 21,000 will be
2,100.
2,100. Then Omoluabi, 10% of 3,850.
3,850.
What?
385.
385. 385. So we'll sum this together. 123,000 plus 2,100 plus 385. What did you get? 125,485. Is that what you got? Let's use our calculator so that because there used to be typo error in this thing, and if there is error, you might not really get the concept clearly. 125,485. That's the total. But you are not writing the total.
Yes, correct. Is what I got.
Yes. So we're not writing the total now. So we'll wait till we finish our computation. So they said from our notes to the additional information that was given from the question, they said Omoluabi shall be entitled to 2,100 monthly salary. His monthly salary, let's call that one note 1, Abi.
Yes.
Omoluabi is 2,100 monthly.
Yes.
And we are preparing an account for 1 year. 2,100
times 12.
25,200.
25,200.
Yes.
So we are going to bring in Omoluabi's into the appropriation account straight away, since we've already calculated it and it's the only one. Appropriation account. We have Omoluabi salaries. Salary Omoluabi is how much? 25,200.
25,200.
25,200. We'll go to the next information. Interest on what do they call it? Interest on current accounts. Interest on current accounts. We call that one our note 2, Abi.
Yes.
Interest on current accounts. That is the note 2. And who is interested? Who is entitled to that?
Omoluabi.
Interest on current account. Omoluabi. Why is it
Yes.
that is only Omoluabi?
Because Oshun is owing the company, the partners.
Yes. So it's only Omoluabi that have a credit balance. That is the reason why it's only Omoluabi that is entitled to this. And they say it is on what? What is the percentage?
15%.
15%. So we're going to get 15 over 100 times its amount on the current account, which is 12,600. 15% of 12,600 is what?
1,890.
1,890. 1,890. We'll bring it here.
Mr. Brazis.
Interest on current account. Yes.
I did not. You said salary for Omoluabi is 25,200.
200. Yes.
But I got 252,000.
No. 2,100 times 12.
Times 12.
Yeah.
Okay. Maybe it's my calculator. I got 200.
No, it's your calculator. Try again.
Maybe you use 21,000.
No, 2,100 times
12.
Oh, sorry. Maybe I'll use I've gotten it. Thank you.
All right.
Good. So Omoluabi is entitled to 1,890. That one we call it note 2. So from our note again, they say they shall be also be the same note 2. Note B, additional information B. They are also entitled to 10% on drawings.
Yeah.
So this one is not like they are entitled to, it is a charge. And we've already, I think we've treated that.
Yes.
We've treated that. That is what we have on the credit side after the profit.
Yes.
Because this one is a charge. Is a charge, is a profit to the partnership business, and it is a charge to the partners. It is the partners that bear the burden, but it is a partnership business that get the profit. So the next one is 5% interest is allowed on capital accounts. So what is their capital? Let's call that one note 3. Capital account. For Oshun, what is the capital of Oshun?
18,375.
Okay, I thought you say Oshogbo. So interest on capital is 5%. So Oshun is going to be 5 over 100 times
18,375.
18,375. What did you get?
919. Approximately 919.
18,375 times 5%. 918.75, Abi. So approximately 919. So let's bring it here. Capital account. Interest. Oshun is 919. Then Omoluabi is how much? 5% over 5 over 100 times how much is the capital of
105,350.
105,350. 105,350 times 5%. What did you get?
5,268.
5,268 approximately. 5,268. Omoluabi here. 5,268. We're moving, right?
Yeah.
Okay,
I don't know if I'm lagging though.
you said?
Whether I'm lagging behind, I was just taking it from how it's stated, but I just see you not going in that direction. So somehow lost.
You said?
I thought we were going to take it as from the notes somehow, but it's like you're not taking it the way I was following. So somehow lost. I hope I grab it.
Okay, where are you lost?
Everywhere.
Please, Sir Aziz.
Yeah.
I guess it's the appropriation we're doing, right?
Platform because
Mr. Aziz, explain.
This is what we say. We said in the appropriation account, we always start with our profit for the year, which will be on the credit. And we got 123,000, right? And
yes.
So we'll also establish any profits that is accrued to the partnership business. We'll also establish any profit that is accrued to the partnership business. And what is the profit in this case? Is what do they call it? Interest on drawings. Interest on drawings. And we say interest on drawings is a profit to the partnership business, but it is a charge on the current account of partners account. Is that one also clear?
Yes, sir.
Yes. So we now calculate 10% of Oshun and Omoluabi, which is 10% of 21,000 and 10% of 100,000, which give 2,100 and 385 naira respectively. Is that also taken?
Okay. Yes, sir.
So now we now come to the debit side of the appropriation account. That is the profit we have made. This is how this is how it's going to be distributed. So we started with we say let's follow the notes, additional information from our question accordingly, the way it is there, one after the other.
Okay.
So we're following it so that we'll not get mixed up anywhere. We decided not to follow what is there in the book directly, but we are following these notes so that we'll not miss anything and we'll get it logically in a systematized order. So, and this is what we got. The note A, under the additional information, says Omoluabi shall be entitled to 2,100 monthly salary. And we said, since accounts that we are preparing is for the year, so we come to our notes and calculated monthly salary for Omoluabi, which is 2,100 times 12, and that gives 25,200. Is that one taken?
Yes.
Taken. We go to the next one, which is note B. Note B carried two different items, which we have already treated one. The items it's carrying is interest on current account and drawings. I remember yesterday you made mention of this. You even call our attention to the interest on current, the 15% and 10%. You remember?
Yes, sir.
So we now say interest on current accounts is a profit to the partners, while a charge on the business. So it's coming to the debit side of their professional accounts. And interest on current accounts, we said is only Omoluabi that is entitled to it, because it's only Omoluabi that is having a credit balance at the end of the year. Oshu is also having balance, but a debit balance. And this debit balance in current accounts means that particular partners has overdrew what the money is having in the partnership business. That is in the current account. That is the account it keeps with the partnership business. Is that also taken?
Yes. Thank you.
Taken. So we come to the next one. And we said interest on current account is only Omoluabi, and we calculated it to be 15% of 12,600, which he's having as his balance. And that gives us 1,890. We now jump to additional information C, which is 5% interest on capital contributed. The capital, we prepare capital account earlier, and we established that the capital contributed by Oshu is 18,375, Omoluabi 105,350. And when we calculate 5% of these both persons, or personally or partners, we were able to get 919 for Oshun, which is 5% of 18,375. We're also able to get 5,268 for Omoluabi by getting 5% of 105,350. Is that correct?
Yeah.
Is that taken?
Yes, sir.
That is where we are. That is where we are. So we're now going to the last note there. That is note D. They now say Omoluabi is also entitled to a 5% commission on profits after such commission had been deducted. So they are now telling us that Omoluabi has additional 5%, which is commission on a, what do they call it?
On profit after.
A commission
on profit.
Yes, on profit. After such commission had been deducted. Do you get that statement? If they said Omoluabi is entitled to 5% commission on profit, I think that one is a straight statement. We'll just get 5/100 times 123,000. But because of the way they frame this particular statement, they say is entitled to 5% commission on profit after such commission had been deducted. So to get that, you know the way we normally calculate our tax. When you want to calculate your value added tax in your company the way you have been doing, what is the percentage of value added tax? 7.5%, isn't it? Hello?
Yes, it is.
Yes, sir, 7.5%.
7.5%. But because the 7.5, the VAT amount has been included in the contract sum. So when you want to calculate your value added tax in your company the way you must have been doing, so it's not going to be 7.5 over 100 times the contract sum. Rather, it's going to be 7.5 over 107.5. So the same thing is applicable to this because of this statement they made. So if we want to calculate commission on profits, which is our note 4 now, commission working for or note 4, commission on profits. Who is entitled to it? They say it is Omoluabi. So it's like Omoluabi is getting almost everything here. Omoluabi is now going to get 5 instead of 5 over 100. It's going to be 5 over 105 times the profits. And what is the profit? 123,000. So when you calculate that, how much did you get?
5,857.
5,857. So that is what Omoluabi is going to get here. Let's say commission on profits. Semicolon, column, what do they call it? Omoluabi. So it's going to be 5,857. So have we gotten this now?
Yes.
Is there any other benefits that any of the partners is supposed to get from the question we are giving so far, apart from their share of profits? There is none, Abby?
No, yes.
There is none. So now we're going to calculate the total profit now, and we'll calculate the total appropriation so far. The difference, which is the balance that is remaining, is what will now be going to each of the partners that they are going to share equally. So let's start from the credit side, which is the total profits now. We did it earlier, but we can still do it again. Let's add those items on the credit side. 123,000, 2,100, 385. Add them, let's see.
123,485.
Is it 123?
125,485.
125,485.
125,485.
All right, thank you. So since the profit, so it is that 125,485. Write it for one corner.
Okay.
Have you written it for the credit side? Don't write it on the credit side yet, because we've not written the other side. So on the debit, let's sum up all those items of expenses or appropriations so far on the debit side. Let's sum them up.
$39,134.
Is that what we all got?
No.
39,134.
Yes. 39,135.
39,135 or 134.
134. Sorry, 39,134.
134.
The appropriation so far is 39,134.
Yes.
And the total profit is 125,485.
Minus.
If we now deduct the appropriation so far from the total profit, what do we get?
86,351.
86,351.
Yes.
So it is this 86,351 that will be shared by the partners equally. And that will be the end of the sharing. Did we get that?
Yes.
Good. So we'll now come to the debit side again. After all the commission, interest, salary that we have already treated, we'll now say share of profits. And this column, I think this in is column, this double dot is column, Abby?
Column.
Column, yes. We'll now write the partner's name, Oshun, and we'll write the other partner, Omoluabi. So Oshun, if we divide 86,351 divide by 2, what do you get?
$43,175,50
43,175.50. The same thing will also be going to Omoluabi 43,175.50. If you underline it, you extend the total which you have gotten before, which is 86,351. So you can close your accounts with the total you have earlier, which is 125,485. 125,485. We are done with the appropriation account. Let's now go to a partner's current account. Partner's current account. There are so many ways of preparing this partner's current account. If you like, you can prepare current account for each of the partners separate. If you like, you can do it in this columnar format. I think that is clear. You can, if you like, we can prepare it for Oshun separate and Omoluabi separate. If you like, we can combine it. So combining it will make it easier and faster, Abby.
Yes.
So for the current account now, so let's start with a balance brought forward. In this balance brought forward, we were told from the question that the current account balance brought forward for Oshun is a debit balance. It means Oshun's balance brought forward will be in the debit side.
Please share your screen. Share your screen, please.
Is that okay?
Yeah, it's okay. Thank you.
All right. Suzanne, can you unmute yourself? Let's hear what you have to say. Susanna. Abi, Susanna is no longer there. Susanna is not there again. Okay. So balance brought forward for Oshun is 10,500 debit. So we'll bring it under Oshun, 10,500. Yeah, so what we do is current account. We also have balance brought forward for Omoluabi is 12,600. It's going to be credit under Omoluabi, 12,600. So we now go to the entitlements to each of the partners from appropriations account. We just finished working now. So let's follow them. Let's follow them. Let's follow them serially now. Number one, we have what do they call it? Salaries, Tabi.
Yes.
Are we together? Salaries. So who is entitled to salary from our appropriation account? Omoluabi. Omoluabi. So we'll go and add it to what Omoluabi is having on the credit side. We'll now say salary as our description. Under Omoluabi, the amount is 25,200. So we'll add it there, 25,200. We are done with that. We'll go to the next one. Commission. The next one we have, the next one we have interest on capital, interest on current accounts. From our own workings, the one we are doing now, right? I will share this thing I'm writing after
Hello,
this.
Mr.
At the end of this class.
Abdulaziz.
Yes, please.
Hello, sir. Please,
yes, I'm with you.
Can you explain to me why this commission for profits, the 5% is on the profit after the commission has been deducted? The additional information, number D, Omoluabi is also entitled to a 5% commission. Can you explain to me why it was 5/105 instead of 5/100? Why
because of this,
it, please?
Because of this statement, they say after such commission had been deducted.
After.
Had it been this statement, had it been this statement is not there. Had it been they just say Omoluabi is also entitled to a 5% commission on profit and stop there, full stop. It's going to be 5/100 times the profit.
5/100. Okay.
But because of this additional information they put there, so that is why it is 105. And I linking this to our tax, the way we normally calculate VAT. You know, VAT is usually over 107.5. You remember?
Yeah.
It used to be one. That's the reason.
Okay. All right. Thank you.
You're welcome. So the next one after salaries in our appropriation account is commission. Commission on what? Commission on profits. Is it commission on profit we had? No, interest on current account from our own notes, not from the material. From the notes we calculated, interest on current account. Interest on current account is only Omoluabi that also have that. So we'll now say interest on current account. And interest on current account for Omoluabi is what? 1890.
1890.
So it's going to be under Omoluabi column on the credit side. 1890. 1890. Yes, 1890. Yes, 1890. You say? The next one is interest on capital accounts. Interest on capital account. which is 5%, and we calculated it to be 919 and 5268 for Osho and Omoluabi respectively. So we'll just bring the amounts. Interest on capital accounts for Oshun is 919. For Omoluabi is 5268. 5268. So the next one, we are through with that. The next one we have is a commission on profits. Commission on profits. So commission on profits, like we know, is only Omoluabi that is also entitled to that. Commission on profits, Omoluabi that is entitled to that, and the amount is 5857. 5,857. That's the interest on profit. So what is the next one now? We also have
Eh?
Our
share of profit, is it not coming there?
Share of profit is coming. We take share of profit. Share of profit to each of them is how much?
73175.5.
73175.
No,
43,17550.
43,175.5, right?
Yes.
43,175.50. The same thing with the other person. 43,175.50. So from the appropriation account, we also have interest on drawings. That is the 10% interest on drawings. So the interest on drawing now, you know, is a profit to the organizer and they charge to the partners. Interest on drawings for Oshun is how much?
2,100.
2,100. For Omoluabi,
385. 385.
385. 385. 385. 2,100, 385. So we were told in the question that drawings accounts, that is what the partners withdrew from the partnership during the year. Maybe I need one money sharp, and then I could not really get money to borrow from anybody. So let me go to my partnership business and collect from what I'm having with them. Abi, shebi na my money now. So let me collect part of it and borrow. So that is drawings. So in the drawings, we're told that Oshun collected 21,000. So it will come to the debit side because it will be reducing from what they have. Credit is what they are having. The money they are having with the partnership business is on the credit. Any addition to that money will also come to credit. But any withdrawal from the money will come to debit, or any interest they charge that particular partner will also come to debit. I think this concept is clear.
Yes.
So we'll now say drawings. Drawings is 21,000 for Oshun, 21,000. And then for Omoluabi is 3,850. Is there any other thing again? Is there any other thing again? I think that is all. So we'll now balance up these accounts. So I will advise that since there is no any other thing that is coming to this account, let's leave one space for all of them, so that whichever one that comes higher will now take the lead. So let's start with Oshun debit side. What do we have in Oshun's debit side? Let's sum it together. 10,500.
Okay.
10,500 plus 21 plus 21,000. What do we get?
33,600.
33,600. We'll write it somewhere. We'll go to the credit side. How much is Oshun having on the credit? We have 919 plus 43,175.5, making what? 44.
1,094 now.
So it means credit side is higher. So it's credit side that will now be having the closing balance figure. So which will now be 44,094.50. The same thing on the other side, 44,094.50. So what is the difference between 44,094.5 and what we have on the debit side, 33,600? So it will be balance carried down on the debit side to the against Oshun 10,494.5. Yes, 10,494.5. Let's come to Omoluabi now. On the debit side, what do we get for Omoluabi? 385 plus 3850. What is that? 4235. 4235. So let's come to the credit side. We have 12,600 plus 25,200 plus 1890 plus 5268 plus 5857 plus 43,175.50. What do we get? 93,990. Okay, we have 93,990.550. So it shows that the credit side is also higher here. So 93,990.50, while the other side is but we also bring it down here, 93,990.50 on the debit side too. So we'll now find the difference between the debit and credit now. The debit is 93,990.5 minus 4235. What do we get? We get 89,755. 755.50. So with this, we have concluded preparation of this what do they call it? Our current account. So the balance carried down will now be brought down to the credit side. I think they are both debit, Abby. So we now say balance brought forward for Oshun 10,494.50, while for Omoluabi 89,755.50. So with this, we have come to the end of this this particular question. Is that understood?
Yes.
So should we try another question, or we should go to another topic?
We should go to another topic.
Another topic. But Mr. Abdulaziz, let's go to another topic. Hello.
Hello, yeah.
I observed that we did not treat a profit and loss account under this partnership. Is it that there's no profit and loss account, or is this how we're going to be treating it?
Yes. The reason why we did not treat profit and loss account under this is because they have already prepared the profit and loss account for us. So there is no any information to be used to prepare profit and loss account here. So if at all there is any information to be used, so we'll just prepare our normal profit and loss account. And then when we arrive at the profits, we'll now use it, we'll now appropriate it among the partners. I think example 4. Can you see example 4 on the screen?
Yes.
So let's just okay.
Let's treat it though.
Okay, we should treat this question.
Yes.
That one is also not having this thing. There is no any.
Oh, can you just explain? Just go through it.
Okay, let's explain it so that we'll not waste. We'll be able to achieve more. You know, this our class supposed to end in like 30 minutes time.
Yeah.
Example 4. Ayo, Femi, and Kunle are in partnership, sharing profit and loss in a proportion 3:1. The one we just finished solving now, they share their own profit equally, and there are 2 of them. They share the profit equally, and then there are 2 of them. But in this case, there are 3 of them, and they are going to share the profits in ratio 3:1. So what this means is that if we come to appropriation or share of profits, whatever the remaining balance of the profits is, will now be shared in accordance with this ratio. Number 1, I think Ayo is 3, Femi is 2, and then Kunle is 1. And if you add the 3 together, you're gonna get 6. So to calculate the proportion of Ayo's profits is going to be 3/6 times the profits. To get the proportion of Femi, it will be 2/6 times the profits. To get the proportion of Kule, it will be 1/6 times the profit. Is that understood?
Yes.
Yes.
So they now say by the terms of the partnership agreement, interest on capital is 5% per annum, and Kule entitled to salary of 300 per annum. So you can see that interest on capital is 5% per annum. So that means all the partners will get 5% on their capital.
Yeah.
Good. And Kule entitled to salary of 300 per annum.
Yes,
So Kule, the salary of Kule now will be 300. We will not multiply this one by 12.
By 12, yes.
We will not multiply by 12 because it's not monthly. The previous one we solved is monthly salary.
Yeah.
Yeah. So this one is per annum. Sorry, don't mind me.
Please, can you come again? No, can you? I didn't get the explanation for Kunle's salary, please.
They said Kule is entitled to salary of 300 naira per annum. Per annum means per year.
Yes.
So it means for the whole year, the total salary is going to get is 300.
Okay.
Is that clear?
Yes.
But the other one we saw,
per month.
they said the salary, the partner that is per month. That's why we multiply that one by 12.
Yes. By 12. Okay.
So we need to pay attention to all these things so that we get the right information. On 31st December 1970, the following credit balances appear in partnership book. That is the partnership books. IOS capital account, Femi's capital, IOS capital account 5,000, Femi's capital account 4,000, Kule's capital account 2,000. I think we already know what to do with this.
As a current capital brought forward.
Yes. So
Yes.
if we are preparing the capital accounts, these are the only items that will come into the capital account.
Yes.
Good. And then if we are calculating interest on capital, as we're told in the question that they should charge 5%, so it's going to be on this amount as well. Is that clear?
Yes.
So they now went further and say IOS current account is 1,000.
I did not get the last statement you made. Sorry, please.
We're talking about IOS capital accounts. We're talking about capital account of the partners. We say capital account of the partners. What you're going to use them for in your computations is going to be when you are preparing the capital account for partners. And the capital account for partners entails the amount they have contributed as capital. Exactly. That's the only amount that will be going into that account, their contribution. And then if you were supposed to charge interest on capital, it is also going to be based on this particular capital they have contributed, which is 5% on this. So it's going to be 5%. It's going to be based on this amount they have contributed. That's the statement. Is it clear now?
Yes. Yes, thank you.
So IOS current account is 1,000. Femi's current account 400.
Please
Kule's
roll it
current
up so that we
account,
can see the current account.
no, is there? Is your own that you just scroll your own screen or you reduce the zooming?
Continue, sir.
Okay. So we're given the current account and we already know what to use the current account for. If there is interest on the current account, we're going to charge the interest on that amount, this amount you are giving. And when we are preparing the current account, what do they call it? Current account for the partners. This is the amount that will be our balance brought forward. In this case, all the partners are having credit balance. Since they did not indicate anything there, they only give the amount. So if the amount is given, we assume it is a credit balance. Femi's loan account.
Sorry,
loan.
Okay.
Yeah.
You are showing 4,000 instead of 400. Is that a mistake or something?
Where?
Yes,
which one is that?
Please add 0.
Okay. No, which part are you talking about now?
Family's
current account.
Okay, current account.
Yes.
Okay. It's 400 against 4,000. Then the other one.
Okay.
No. So the Femi's current account is 400, not 4,000.
And Kule is 100.
So
okay.
So from the current account you're having on the material, you remove 10 there.
In the solution bar?
Yes, you remove the 10 there.
Okay.
You will be left with 400. So you discover that by the time you add 4, 2, 25, and 400, it will give you this 1025. I hope that is clear. Myself, I've not even opened it up to that side. You know, I'm just opening this material like this now.
Ola, I did class. I'm not
So,
interested. Thank you.
Okay. Then they now told us Femi's loan account. So who can explain this to us now?
Drawings. Femi borrowed 500 naira from the partner's account.
Okay. I can hear you.
I said that Femi's loan account is the same thing as drawings. Femi collected 500 naira from the partner's account.
Okay. He collected 500, yes?
It's going to be treated in.
So it's going to be treated as an expense in the appropriation
Okay.
account.
Okay. So then the net profit for the year before charging interest on capital, interest on Femi's loan, and Kunle's salary amounted to 2,075. Right? 2,075. So it means
Hello.
there is a particular, yes, I'm with you.
Okay, I don't know. For that loan, I don't think he borrowed it from the this thing. I think he borrowed it out to them. Because if you check the questions or the solvings very well, you see where he was charged. There's an interest of loan that was charged to his account, like a payment for. Yes, it's not drawings because drawings is already there. Safe.
Perfect.
I think
Do we understand this explanation? No, that's what happened. This yes.
Okay. That means Femi is loaning the other partners 500 naira.
Yes, it's lending 500.
Yes.
So that means when if there is something like that, before you can now share the remaining profits for the year, you must first deduct, you must first take into cognizance that particular interest on loan, because it's a charge on the profit of the partnership business. And that's the only thing. You know, in this particular question, we're asked to prepare the appropriation account, balance of the account of the partners. So they also prepared this thing, what do they call it, POL account. We're not asking the question, but because of this particular transaction, it makes it necessary to prepare this particular account, profit or loss account. And that's the only thing that was treated there. So without that, there might be no need to prepare profit or loss account. I hope that's clear. So have we gone through some of the past questions? Is there anyone that were asked to prepare what do they call it? Profit or loss accounts in this partnership question? Is there anyone?
Yes, but I can't remember the year for his question 3A. I can't remember the year.
Okay.
Question 3A.
I have some here. I have some here. Let me quickly check so that the final of the rest of the goodwill. Final account. Okay, you can't remember the year, Abby?
No, I can't remember the year, but it's question 3A. If I could check, let me see.
Can you quickly check? So let's see if there is anything like that. We will share it among ourselves now. And we'll
Hello, everyone. We have it in 2020 first semester.
2021
first semester.
2021 first
Yes,
semester. Okay, I've seen another one in 2018 November. Okay, 2021 first semester. Question what?
Question 3A.
Okay, I think that's the one this person is talking about.
Yes, it's a similar question. How can we put something like this? Because I got confused from after.
Come on, which of the question? What year?
2021 first semester.
2021 first semester. 2021 first semester. Okay, yes. Question 3.
Yeah.
Okay. Sunday, Kojo, and Dora.
Yes, you can see it's like a similar question.
Okay. This one, hello, everyone.
Yes, please.
Hello, sir.
Yes. If we can solve this question 4 on our material, we will be able to solve this question 3A in this past question paper of 2021. It is exactly the same thing. They just changed some of the figures, but the arrangement, everything is the same thing. Is that clear?
Yeah.
So there is another one I got. That was 20. Is there anyone with 2018? November 2018.
Yes.
You have November 2018, right?
Yes.
If you check question 1B.
Yes.
Question 1B is a partnership question. And it's 25 marks and it's compulsory. So in the question, you are required to prepare statement of profit or loss for the year ended 31st September 2017, partnership appropriation accounts, partners current accounts, statement of financial position as at that date. This one is a big one. But the only difference.
Let's see.
Yes, the only difference with this, the only difference we have between this and what we have earlier is that you are required to prepare profit, what do you call it? Statement of profit and loss account and the statement of financial position, which is balance sheet. Yeah. Those are the only two things that are not in the one we have solved. And those ones are simple now. Should we know how to prepare profit and loss account and balance sheet?
Yeah.
Yes, it's just the difference now. There's no any big deal there. So after this class, I might share this November 2018 with us. So we'll try it. So if peradventure, anybody that tried it and is hooked anywhere can bring it to that our ACC311 revision group and post it there so that we can discuss it over there and see how we can solve it. Or if time permits us, we can discuss it tomorrow after our we'll be having our boss 317 tomorrow.
Yes, it's okay like that.
So we can discuss it tomorrow. So let's look at, so at least we've been able to, we are prepared now. We've been able to understand some of the things that we can come across under partnership accounts and how to get them. I think this particular one, some of these things I've not really taken my time to, but notwithstanding, you can still find a way around it. So the next one we're going into now is, let me see.
Ratio, share, ordinary shares.
Okay. So this partnership account have some other theoretical aspect of changes in constitution of partnership, all those things that theory, type of goodwill, revaluation of assets, reason for goodwill and all that. I think we know all these things. We must have read it, Abby. So we have, what do they call it? Okay, we also have conversion of partnership into limited liability company. We have that. And then we also have a company account. Should we go into company accounts now?
Yes.
So
Let's do financial ratio.
Let's go to company account.
It's true.
Financial ratio, please.
Let's do financial ratio.
Let's do financial ratio.
Okay.
Financial
Financial ratio is under which of the topics? I think it's not under company accounts, right?
No. Yes.
Yes.
It's under company account.
Financial ratio.
Module 4. Yes.
Okay. Let me see if I can open it. No, financial ratio is not under company account. It's under interpretation. Interpretation of accounts, module 4.
Yes.
Okay,
financial analysis.
It's in unit 2. Unit 2 of module.
No, that should be module 5.
Unit 2 of module 4.
No, module 5.
Okay, module 5.
Module 5. There are 5 modules there. They make mistake in the material. They have module 4 2 times.
Oh, okay. Okay.
So which one are we talking about? Should we do module 4 or module 5?
Financial ratio.
Financial ratio.
Okay, that is module 5.
Yes.
Let's go to financial ratio. sorry, you know, this place, you cannot really get, on this Zoom, you cannot really get the pages directly. Okay, I think this way, this the place. Am I right? Hello?
Yes.
Please.
Are we still
Yes.
together? Good. All right.
Introduction to interpretation of account.
Yes, introduction to interpretation of account, financial statement, and under
Analysis.
this we have three modules, 3 units here: financial statement analysis, classification of financial ratio, and cash flow statements. So let's start let's start unit by unit. The first one is financial statement analysis. So here we say it is the process of providing information about financial performance and position of an entity in terms of profitability, liquidity, growth, and survival to users, so as to enable them make informed investment and other economic decisions. So what this is saying in essence is that, you know, you as an investor, if you want to invest into a particular company, you will be curious to know what is the state of this particular company before I go and venture or invest my money into it. Is the company performing? So what is the level of performance? Is it having liquidity? So can it meet, can I lend my money to this company? Is it credit worthy? Does it have that liquidity to be able to meet those financial obligations as at when due? So that is what all these long grammars are saying. But to be able to get it properly, the rationale behind every financial statement analysis is for decision making from the financial information that has been obtained. Financial information is needed to predict, compare, and evaluate company performance and position so as to measure the level of quality management put into business. We have accounting as an information system. Accounting can be seen as an information system, this, and that. Then the purpose of accounting information, all these things, I think they are still theories. Purpose is to determine performance of an entity, determine financial position, to measure whatever. So users of accounting information, they gave us the users and the information needs. Objective of financial statements. What is the objective of financial statement? Financial statements are usually produced out of the accounting record maintained by companies, generally accepted accounting principle. So the purpose of financial statement is to decision making this or that. Limitation of financial statement is this also. It has limitations of financial statements. So we also have sources of documents for financial ratios. So I think we are getting there gradually. A company annual report contains a lot of useful information which are used by financial analysts. So it is analysts that come and analyze the financial statement of an organization to be able to tell you one or two things about the performance of that organization. So the information, source of information is statement of financial position, statements of profit or loss, another comprehensive income. Another name for this is comprehensive financial performance. So we also have change in equity and all these things, all these items that you have in the accounts. Usually, in the statement of financial analysis, focus is usually on the statement of financial position and the statement of financial performance, which is profit or loss. Those are the two basic accounts to be used for your analysis when you are analyzing financial statements. So you discover that most of the information you use are from these accounts. So we also have statement of profit or loss. Statement of profit or loss. This statement is a financial measure
of the company's performance during a particular period of time, the statement presents the summary of income, expenses, and the net profit of a company. So all this one is still theoretical aspects of the something. Okay, so I think I'm seeing a self-assessment exercise. So it's like this particular unit 1 is full of theory. I think this is the theory. We'll just read that on our own. This is the TMA there. The TMA, tutor marked assignments. Question 1, the trial balance of Danladi Bako Limited as at December 2014 is as follows. Ordinary share capital, this. Purchases and revenue, this and that. Which one? They put purchases and revenue as 400 and 547 respectively. So can somebody tell us which one is purchases, which one is revenue?
Yes, is on the credit side, the debit purchases.
Yeah.
Is not clear?
The revenue on the credit side is the sales, while the purchases on debit side.
Correct. So we need to get acclimatized with this. You can see that they are not giving us purchases separate. They are not giving us revenue separate. Revenue is another name for our sales, Abby?
Yes.
All right. So they expect us at this level to have known most of these debit and credits of the accounts. Inventory as at January 2014 is this. So this one represents what? Opening stock, right?
Yes.
Returns. What is returns? Returns is also having debit and credit.
Yes.
So there is return inward from sales, right?
Yes.
And there is also return outward from purchases. So which one is return inward that is related to sales, and which one is return outward that is related to?
244
is return inward?
Purchases.
Okay.
Outward is
24 is
only.
return inward. Okay, good. This
Hello,
class
sorry,
is smart.
I didn't get it too. Sorry, I don't know. I didn't get it.
Okay,
sorry.
I said, which one is, they say returns. That means they don't want to give us return inward separate, return outward separate. They only say returns. So which one is the return there, return inward? Which one is return outward?
I don't know. I'm sorry.
Okay. So this is the easiest way to get it. You said your sales is 400, 200, Abby, debit.
Yeah. Yes, sir.
Abby. So if you make sales of,
yes, sir.
If you make sales and it's on debit, if they return part of the good you sold, it's going to be where? Credit.
Credit, sir. Yeah.
The opposite direction. The same thing is applicable to purchases and return outward. So this is just a simple logic to that. It's just a simple logic. We also have wages, self-explanatory,
returning what
rent.
So which outward now?
Return outward from purchases, return inward from sales. We also have rents. Our rent is an expense that you pay. Motor expenses, insurance, irrecoverable debt.
Expenses.
Which one is irrecoverable debt?
Bad debt.
Bad debt.
No.
Bad debt, Abby. Good.
Bad debt.
Yes.
Allowance for doubt. Yes, good. Allowance for doubtful receivable as at January 1st, 2014. What does that mean?
Provision for bad debt, which means the
Yeah.
person has a chance of paying.
Yes. Thank you. All these things will come to play under our adjustment or our workings when this account is being prepared. So we also have
Discount.
discounts. The discount is
credit.
also debit and credit. Which one is, so it means there is discount allowed and discount received. Which one is discount
one on
allowed?
the debit.
Which one is discount received?
The debit allow the credit to receive because it's an income. Discount received.
Okay. Are we following?
Yes.
So we also have.
Yes,
So we also have baby accountant in the house. So we have light and cooling expenses. That one is an expense now. We have bank overdraft interest is an expense. Motor vehicle at cost. Is it an expense?
Fixed cost. That's under financial position.
You call it what? Motor vehicle is what? Yes, non-current asset. No, I just want you to correct yourself. You say fixed cost. It's not fixed cost.
Yes.
Yeah, not fixed cost. Even the old nomenclature is fixed asset, Abby. So and the new nomenclature is non-current assets. So we also have what again do we have there? Accumulated depreciation from the motor vehicle. So we have fixtures and fittings. It's also an asset. Fixtures and fittings. This one is most of these fittings that you have. Your show glass, your what your furniture and the likes. Then accumulated depreciation of fixtures. Land. There is no accumulated depreciation on land in the question, Abby, because they say land does not depreciate. So we have receivable and payables. We have receivable and payables. We have bank. We have bank represent our cash now, Shay.
Yes.
We have building at cost. We have aggregate depreciation on building at January 1st, 2014. That is accumulated depreciation, right? As at January 2014. And this account, mind you, you are preparing this account as at 31st December 2014. It means you have to make provision for all these things that you are seeing in the accounts. They now say retained earnings as at January 1st, 2014.
Balance brought forward.
That is balance brought forward of our retained earnings, Abby, or of our profit brought forward, simple puts. So you are giving the following additional, all the ones we have treated so far are very simple, isn't it?
Yeah.
So this additional information are the adjustments that will now add flesh to what we are seeing there. Inventory. The information one, inventory as at December 31st, 2014 was 38,520. That one represents what?
That's our closing stock.
Closing stock. Good. Rent prepaid was 1,005, and light and cooling expenses owed was 690 as at December 31st, 2014. What this means is that there is rent in the question. Check the rent again. Is it 19,500 or so?
Yes, 19,500.
They are now telling us there is rent prepaid. Rent prepaid, prepayment means You have paid for something which you have not enjoyed it. So it means it is an asset to you. So this particular prepayment, that rent of 19,500, it means it is not the entire 19,500 that is for the year. Out of it, 1,500 is in respect of the following year. So we have to deduct it. Is that understood?
Yes.
Good. They now say cooling expenses owed was 690. It means we have enjoyed this particular service or these expenses, but we are yet to pay. So, and the cooling expenses we have, do we have cooling expenses in the question?
4,611.
46. So it means this 4611 is not the total expenses for the year. There is a particular amount we have not paid. So we have to add it. That's what it means. We go to note 3. Land is to be revalued at 375,000 as at 31st December 2013. We are preparing this account as at when?
31st of December 2014.
2014. And we are giving land at 150. 150. So how does this affect what we are doing?
Does that mean the amount, that 150 amount they gave to us as at 31st in 2014 is not, will I say is not correct, because the amount given out to us as at December 2013 is even more than what we were given as at now we are preparing.
I think the land has appreciated.
No.
Appreciated?
No.
Okay.
Revalued, yes. They gave us 150 in the question and the additional 375. It means it has appreciated.
Okay. Another contrary opinion.
The land was revalued from that 150 to 375,000.
Okay, so let's look at it this way.
I think the current price now is 375.
No.
Yes.
But okay, let me start from the last speaker. The time the land was revalued is as at which date?
December 31st, 2013.
And the land in the question is at which date?
31st December 2014.
2014. It means some things are taking place after that revaluation.
Okay.
Because it's an old date. So as far as I'm concerned, this information is useless in this question.
Thank you.
Do we get it?
Yes.
Because of the dates. Why they say land is to be revalued at 375,000 as at 31st December 2014. It's 2014.
Yeah.
This is the figure we will have used.
Yes.
And we go and calculate our what do they call it? Revaluation. Okay. Had it been this revaluation they did? I think we all know revaluation.
Yes.
They revalue the particular asset. So the value will change. It's either it increase or reduce when you carry out revaluation. So now we're told that this particular land was revalued as at 31st December 2013. It was revalued at 31st December 2013. So when it was revalued, it's an old date compared to the amount we were given as value of the land. Yeah. And they are giving us another value of land as at 31st December 2014 as 150. You can see that the value has changed. Do we get it?
I thought this value was the opening value for that year. That one that revalued amount at 31st. Is that not supposed to be the value of the land at the beginning of the year, 31st of December?
Which one is that?
That's 375,000
as
at 31st of December.
2020, yes.
Is it not January 1st, 2014?
Yes.
So that's kind of
that.
The price at the beginning of the year of that 2014.
Yes.
Are we on the same page?
Yes,
no,
it's at no. No, you are right, madam. That is the value as at the beginning of the year.
Yes.
But we are giving the value as at end of the year now to be 150.
Okay.
I don't know if this is clear.
Hello, Mr. Aziz.
Yes.
Yes, you are correct. You are correct that the figure. But what I'm saying here is, I'm saying you earlier told us that land don't depreciate.
Yes.
That is why you don't have share value of land. But I think probably I'm thinking this question, maybe there is a mistake that is supposed to be 2014 rather than 2013. Because land don't depreciate.
No, but this
in accounting, you don't call
when
it land. It's always land and building, and it passes through depreciation. It does depreciate, depending on how you look at it.
No, Mr.
No, I'm
Saddam.
not saying land only. I'm not saying land. I said land and building.
Yes, in some organizations they call it land and building, while some organizations they separate the land from building.
Okay.
Yes.
That's my
so
point,
those organizations that separate land from building, they don't depreciate land, but building they depreciate it for, is it a very insignificant amount? They say 2% or so, because they know that it does not depreciate. But
I understand.
Yes, but the lady that said whether there is a mistake in the question the other time, when they say revaluation of assets, it is not the same thing as depreciation.
I know.
So when they say, sometimes the house you build or the company, the building that you have, the amount, since the building is not depreciated, is not subjected to depreciation. There is tendency that the worth of that building will increase over years. Is it possible?
Yes.
So that is the reason why IFRS now said you should revalue your assets periodically. You should revalue it periodically so as to get new revalued amounts. So it is the revalued amount that should be used in the financial statements.
Yes.
So that whatever figure you are represent, that you're portraying in your financial statement will show true and fair view. The same thing is applicable. There are some buildings you have you constructed for a very long time, especially for organizations that separated land from building. Where is the land? Where is the building? Is the building not on the land? The building is on the land. So, but they separate the amounts. So it is very possible that the land appreciates, but the building has become dilapidated. Is it possible? Is it possible?
Yeah, it's possible.
Yes, it's possible. Yes, it's possible. Based on
So
location.
you can revalue it, and the building, the worth of the building will also reduce. So that is the situation where your asset can be revalued. And vehicle, the vehicle you're using in your company, as a result of usage, vehicle usually in most companies are depreciated over, the lifespan of vehicle is usually 4 years thereabout in most companies. But if you look at it, vehicles does not finish its life in 4 years.
4 years,
Some people
yeah.
might even use vehicle for up to 8 years, 10 years, if care is not taken. But there are
15
some
years, sir.
certain. You said?
Sir,
15
so what's the
years, some banks.
treatment going to be given to these land stores?
So the treatment that is going to be given to this, they have already taken care of that.
So
Because
what we're using when we're posting land, is it going to be 150 or 375?
it's going to be 150.
Okay, so that additional information is almost irrelevant there.
It's almost irrelevant.
Thank you.
Note number 4, following a final review of the receivables as at December 31st, 2014, Danladi Bako decided to write up another debt of 195. The company also wished to maintain allowance for doubtful receivable at 3% of the year-end balance. I think we get that.
No.
We were given an amount 180 as irrecoverable. And we all agree that that amount should be our bad debt. We're now giving that following a final review. That means they are reviewing the debtors. This debtor, will he be able to pay or will he not be able to pay? If we will not be able to pay, why carrying this amount in our account as if it's an asset to us that we're going to recover, yet we will not be able to recover it at the end of the day? So there is no need for that. So we need to remove it. So that is the reason why. So they are now writing off additional 195. That's what this means. They now say the company also wish to maintain the allowance for doubtful receivable at 3% of the year-end balance. There is a provision, there is an amount we call provision for doubtful debt the other time. Can we remember the amount? Allowance for doubtful receivables at January 2014 is 882. Have we seen that? Have we seen the 882?
Yes.
Yes. So they are now telling us that we should make maintain allowance for doubtful receivable at 3% of year-end balance. So we're going to calculate the doubtful receivable. We're going to calculate additional 3.5% from the opening balance, add 3% to it to make up the closing balance now. Is that understood?
No, I don't understand.
No, I didn't get you. Oh.
Doubtful debt is a provision. And the one given in the question is the provision they made last year, which was brought as opening balance this year. At the close of year, at the close of year, okay. At the close of year now, at the close of year, they're not telling us that that amount we brought forward will make additional 3% provision for this year. So 882 will now, this year's balance will now be 882 plus 3% of 882. That will be the closing balance now. Is that understood?
So is the answer we are going to use now, not 882 again?
Yes.
Please, where did you see 882?
Is in the
From
question.
the question as opening balance.
Sir, that 195 for the written off debts, are we going to deduct it from the bad debts?
Yes.
Before we
it's going to be bad debt. Yes, it's going to be a bad debt. Yes.
Okay.
Hello.
Yes, sir.
Sorry. So they now say depreciation is to be provided on a straight line basis as follows. Building. You see what I was saying the other time?
They gave us building at cost too. Okay. Àwọn abọ́ tó wà ní ìpín tí wọ́n lọ fọ̀ wọ́n ká lè wà dáná.
Sorry, please give me 1 minute. 1 minute. Exactly 1 minute, please. Sorry, please. I'm back. Hello. Hello.
No, we are here.
Okay. Depreciation is to be provided on a straight line basis as follows. Building 2%, fixtures and fittings, assuming a useful life of 5 years with no residual value. So what does this mean? It means we're going to determine the percentage. When they say assets useful life is 5%, 5 years, it means that assets will, the percentage will be 20%. Is that correct? Hello?
Hi, I can't get you.
Under fixtures and fittings.
Yes.
They did not give us percentage like the way they did in building.
It's just the useful life, 5 years.
Just you say useful life is 5 years. Like
yes,
the building.
2,000.
Like it is going to be what?
42,000 divided by 5.
Is that okay? So, but this is what we do. When asset useful life is 4 years, like motor vehicle, the percentage will be 25%. But when the useful life is 5 years, it will be 20% now. Abby, I don't know. Are we getting this concept?
Yeah.
Do you get it?
No, I did not. I did not. I did not.
Be automatically 20%. Or is there a way we are going to calculate it to get our 20%?
Yes. This is how we
You see,
calculate it.
Mr. Abdulaziz.
This is what you just do. Let me say this.
Mr. Abdulaziz.
Yes, sir.
The 20% you just said we should use is correct. It's 8,400. But if you 42,000 and divide it by 5 is for 8,400. You know why it's like that? A residual value, if you check or any accounting textbook like Essential, you just see that it's just the cost by divided by the number of years of a useful life of an equipment or a machine.
Okay.
That's why I said 42,000 divided by 5. It will give you the 8,400. Try it and see.
Okay.
You multiply
It's a
by
formula,
25,
not by me.
you get the same thing.
Yes, exactly. That's my point. Thank you.
So that 8,400 will stand as our what, please?
It will stand as fixtures and fittings.
As features, is that the amount we're going to use as our features and fittings, not 42,000?
Yes, in P&L, as you were doing it step by step in your profit and loss account.
Is features and fittings going to come into our profit and loss or into our statement of account?
No, it doesn't. It only comes to final account balance sheet.
Yes. So when you say profit and loss now,
balance sheet, fixed assets or
it's
non-current assets.
Yes,
that element of depreciation should appear in your P&L account.
Yes,
Okay.
P&L, only depreciation, yes.
Okay, under expenses.
Yes, after expenses, before getting your net profit.
Profit, yes. Okay.
Hello?
Yes.
A call came in and meet me. So now this is what we're saying. If you are not giving the percentage, but you are giving the number of year, the lifespan, like the way they did in this question, the simple thing you can do is just to say 100 divided by that number of years. So 100 divided by 5 is what?
Please, Mr. Aziz, what topic are we treating?
We're treating the, what do you call it? Company's account. Okay, are you just joining?
Not quite long.
Yes, so
we are in module 5, or it's not company account, Mr. Blaziz.
I'm just joining, because which topic are we fighting? What's the page?
Check module
What's
5.
the page?
195.
195.
195, yes.
No, for the soft copy page.
Yes,
195.
195.
About is on ratios analysis, not published.
Okay, are we there now?
My one is not showing page number. Wait.
For
module okay, 195. Okay, 195. I'll go down.
So we are treating additional information under note 5, Roman numeral 5. So, like I said,
Mr. Abdulaziz.
Yes.
Mr. Abdulaziz, I'm so sorry for. It's not that I want to take you back. It's just, can you explain the additional information?
Yes, this is what I'm saying now. You see, they said fixtures and fittings. Assuming a useful economic life of 5 years with no residual value.
What are you putting?
It means when you want to get the percentage for that particular asset for charging depreciation, it's going to be 100 over that number of years. Is that understood?
No.
No, please repeat.
You didn't hear me, I mean, you didn't understand it.
I didn't understand. I heard what you said, but I didn't understand.
Okay. When they say fixtures and fittings, assuming a useful economic life of 5 years, that means this particular asset that we bought is going to last for just 5 years. Are you there? It's going to last for 5 years. So it means if you
Okay.
want to depreciate it, you divide that asset by 5. That is what you use as your depreciation. Let me put it that way. Maybe it will be easier for us that way.
The year, Abi. Okay.
Yes. Like now, the asset worth 400,000. Use your calculator, please.
It's
The asset
42.
worth 400,000. If we now say, and they say the asset's useful life is 5 years. So how do we get depreciation for that particular year? So simply, what you're going to do is to divide 400,000 by 5. What do you get?
Is it 40,000?
Eh?
80,000.
80,000, right? That is your
Yes.
depreciation for that year. Each year, 80,000. Each year, 80,000.
Okay, because they said it has a economic
Useful
life
life.
of 5 years with no residual value.
Exactly.
Okay.
The figure for feature and fitness, is it not 42,000?
I'm only giving an example.
Okay.
So if you want to go by our question, features and fittings is 42,000. Or yeah, 42,000 divided by 5. What do we get? What do we get?
8,100.
That's our depreciation. Is that clear?
Yes.
8,500 is our
400.
depreciation.
Yes.
Eh?
Yes. 400.
Okay. So they now say motor vehicle. They did not say useful life, but they say 25%. So that one straight away, we just charge 25% on the motor vehicle. They now say a full year's depreciation is charged in the year of acquisition and none in the year of disposal. So that's what is. So you are required to prepare statement of profit or loss
And other comprehensive income for the year ended.
Profit or loss and other comprehensive income for the year ended 31st December 2014. I think that is clear now.
Yes.
I wanted to ask a question too. You were saying something about this. The land is to be revalued at 375. You were making one explanation. I didn't really get it.
They told us that the land.
Okay.
They told us that the land under note 3, land is to be revalued at 375,000 naira as of December 31st, 2013. So we want to assume that this thing is not a mistake. If it is a mistake, I did think we have as at December 31st, 2014. It means the value we're going to recognize for land in our financial statement for the year is going to be 375. Is that clear? As against 150 that is there in the question. But if this is not a mistake, if they wrote it there deliberately, it means we're not going to touch the amount inside the financial statement because the amount we're having there is 150 and it's as at 31st December 2014.
January. Is that okay? That's December 2014.
As at 31st December
2014. Okay.
Yes.
Okay. That's ahead of the one that is in the additional information.
Yes, yes. You can see that. Our only prayer is just that they should not make mistake. I hope we get that.
Yes, another thing, this aggregate depreciation on building at January, how is it going to be treated? No additional information on it, or you just post that figure direct?
But you have your value for building at 150,000. They now say that aggregate depreciation on building as at January 1st. It means accumulated depreciation on building.
Okay.
Exactly. Yes, brought forward. Opening balance at the year in the year.
Okay.
Yes. That's the opening balance. So
depreciation.
If you want to charge, and they told you in note 5, the building, you should charge depreciation on building at 2%. So you're going to charge 2% of 150,000.
Okay.
Yes.
So if you charge this 2% of if you charge 2% of the building, and if you get depreciation value, does it mean when preparing the P&L? So this depreciation figure you're not going to post in the P&L, is it the 2% or the one in the financial statements?
It's 2%.
The one of 2%.
Yes, which is 3,000 naira.
Okay, then the aggregate depreciation, what do you do with it?
When you come to your what do they call it? Statement of financial position, which is balance sheet.
Okay.
You know you are going to disclose a carrying amount, that is net book value. Right?
Okay.
Arrive at the net book value for that particular building. You bring cost, which is 150,000. Then accumulated depreciation now will increase from 9,000 to 12,000 because the one for the year, you add the one for the year to the opening balance, making 12,000. The one for the year is 3,000. You add it to 9,000, making 12,000. You now deduct the 12,000 from 150,000. So when you deduct 12,000 from 150,000, you'll be having like 138,000. That will be your net book value.
Okay.
Exactly.
Net book value for building.
You said?
Net book value for building now.
Yes.
Okay, thank you.
Right. So I don't know. We'll have loved to solve this question, but it's my prayer time. And when I'm back, I would like to, tomorrow is our distance.
Okay, but 3117, Abi.
Yeah.
Okay, you say you're going to solve
What
it.
time
You may
is
mention
the
that you solve it and post.
Okay, I'll solve this. I'll solve it.
Solve it and send it to our WhatsApp group. Just snap
I'll
and
do that.
When you are solving,
What time
sorry,
is
Mr.
boss
Abdulaziz.
Yes.
Is it like when you're solving, please show all working now, beg. Show all workings. That will help us.
It's okay, no wala.
Show, don't miss out anything at all. All workings, anything that
what
is working,
time is
show
boss?
I won't.
What time is boss 317? Don't worry, he will show every working.
Abio, all the working is important.
Please, what time is boss 317 revision?
Is it the revision? Is it the revision time?
No.
Is it for the revision or the exam? Which one are you asking?
No, the revision time.
9 p.m.
It's 9.
Should be 9. Should be 9.
Okay, 9. Okay.
That was 3-1 this.
Let's go and cram. Oh, I see you now.
I've not touched that bus. So I've not touched it. I've been facing this.
I don't blame you.
I've been facing this 311. That's where my fear is.
No, it's true. It's true. This course is very, very long sum, and
I close the
The
document.
past questions, you are seeing like 6 and 7 pages of question
It's
paper
true.
alone. That alone is even scary
You know
alone.
what we'll do this tomorrow? My
It's
advice
not.
is ACC311. Abdulaziz, let's forget about these examples. Let's just be solving the past example, past
Okay, the past
examination.
question. Okay, no
Yes,
problem.
because
Abi,
those
the
are
past
the
questions,
questions that
Abi.
they will repeat. Exactly,
Uh,
because it's
no,
calculation, please. Especially
like
that
yes.
2021 first
it's okay, no
semester.
problem. We'll do that. I think like the departmental
Yeah.
account, one of the examples that we solve from the material.
Yes,
Is
We
there
saw it
already.
exactly in past
It's
question paper.
already there.
They didn't even change the
Exactly.
figures,
Exactly.
everything
Yes.
exactly.
So
But that's my prayer,
everything.
Ogami.
Wow.
Now. That's my prayer.
So it's
Please.
equivalent to that we have solved one particular question. Because the
I
question is
mean,
not
at
yes.
the attempt departmental. That's why I want to treat the whole topic so that you can calculate which one do you know better. So it cannot be more than 4 questions.
Face
So
that one.
exactly,
Of course. Where
we
will you
can
see the
attempt
time?
3. You
When you be
understand
writing
my
workings and
point?
all that.
Exactly.
Exactly.
So there's
Please.
one beautiful thing with financial accounting. If you understand the concepts, it's not like mathematics where they will say, they will say you must know this boss something. Me, I don't tire for himself.
Exactly.
God will
So
help me. I've not even touched
confusing.
that textbook up until now.
It's full of
the revision that I've been
confusion,
looking
that
at. Is
But
a whole
I
lot
have
of
a point
confusion.
in that bus 317. It's not properly arranged. I'm telling you, because those
At
models
all.
they are
The
just meant to
textbook is not
confuse.
even
How will you be
encouraging to
telling me
read.
production
It's
in
not even
module 1,
encouraging
then
to read.
module 2, you are talking about location, then afterward you now come back to specialization or specification or something that has to do with production. Then why did you take site? Exactly.
So the whole thing is not interesting to
It's
me.
not well properly
I
arranged.
said
I swear,
the
it's just
textbook
full
is
of
not
up
encouraging
and
at
down.
all.
So,
But me, I
financial
know
accounting,
one thing for sure, and I'm praying for it. I know that there will be a question on production tomorrow for sure. I know that one for sure. That's why I keep
Okay,
reading
so you're
production.
giving us more A's to
Because
abuse. You can't read production.
don't follow my
production,
prediction or my probability before tomorrow. They will not ask you. You know that one.
maybe
I know
God is
why.
speaking through you.
Let me tell you, people. You know why government took us by surprise? Because they just asked us current affairs that day. If you look at it from my own perspective.
Hello, Mr. Abdulaziz.
Yes, please.
We were solving financial ratio. All of a sudden, you switch over to company account. And
No, it's under financial ratio.
If I said nonsense.
That financial issue. What we
Hello, madam.
Yes. Formulas.
You did not switch. That is under the financial ratio. This is the first item you come across. That is the preparation of financial statement first. So after you understand how to prepare, are you there? After you understand how to prepare the financial statement first, you now go step further by analyzing the financial statement.
Yes, because they'll be saying asset test ratio, current asset over liability.
If you don't understand the financial statement, how will you analyze it?
Exactly, I understand your point.
So after this particular topic we treated, the one that follows is all those how to analyze.
So Madam Day is trying to say don't go to a war with untested rifle. You have to test it before going to war.
Mr. Abdulaziz, that you're going to pray, please pray for me. This was 317. Now God will help me for that course. I don't even know.
Let me pray also.
I don't know where I sat for that course.
All right.
No, but me, I'll do special consultation for it. I'll just cram some certain aspects. Then I'll now use understanding on other aspects.
For the other ones. Okay, so
but there are some things you have to
cram. Can we end this class?
Yes, we can.
So that it will not be too heavy to be downloaded.
No wahala, no wahala.
All right.
All right.
Thank you.
Bye. Thank you so much.
Mr.
God bless you.
Abdulaziz,
Yeah.
thank you.
Bye.
Thank you.
Bye.
Mommy, I'm a son.